For the final part of Module 3, focusing on the ins and outs of insurance, we'll have a look at how this theory rolls out in practice. We'll start by looking at the sales process and options available to pay your monthly premiums. Then, we'll explore the claims process and finish with defining useful terms for you to understand. Let's go. Looking at the sales process, or the process of acquiring insurance, the first step is to perform a needs assessment. Here, you'll identify what insurance product you really need. The next step is to choose the right product for you. You can apply for your chosen product based on your needs assessment and affordability through an insurance sales agent face-to-face, over the phone, at a kiosk, or via SMS. Next, you'll sign the insurance agreement. Make sure you get a copy of the agreement and read through it to understand all the terms and conditions. Sign the agreement and return it to the insurer. This can also happen telephonically. Make sure that the company has your correct details, including your identity number, contact number, and address. To confirm you are insured, you'll receive a policy document along with your policy wording and a certificate of insurance. Keep these safe. Now that you're insured, ask yourself, are you satisfied? You can speak to customer services at any point if you want to upgrade or downgrade, have queries or need information, or to sign up for additional products. For funeral policies and life policies, there's also a 30-day cooling off period if you change your mind. There are many ways to pay for your premiums. You can pay at a retail store like Pep, Money Market, EasyPay, or a funeral parlor. You can use a store account like Jed, set up a monthly debit order payment by providing your bank details to your insurer, or set up a deduction from your bank account with a stop order. Remember, if you don't pay your premiums on time, it may result in your policy lapsing. But with short-term insurance, you can miss 1 month's premiums if you commit to pay double the next month. Now we'll have a look at the claims process. Obviously, an insured event like a flooding or death must happen first. If this happens, you must notify your insurer as soon as it happens and make sure you are within the notice period. The insurance company will guide you in terms of the information they need in order to claim. You will also have to prove your claim. This can be done by completing a claim form with supporting documentation, which includes identity document, death certificate, police report, medical report, proof of damage to the item, or proof of ownership of the item. The next step, step 4, is when your insurance company agrees on the amount they will pay out, as per your policy. When it comes to short-term insurance, there may be an excess that you need to pay. Remember, excess is the predetermined amount that you have agreed to pay. Let's have a look at an example. Where you submit a claim for 5,000 Rand on your car, if you have agreed on 500 Rand excess for the vehicle, you will have to pay 500 Rand first. The insurer will then pay the remaining 4,500. In some instances, there is no excess. The last step is for the insurance company to repair the damage, replace the item, or pay out cash. They also have the right to reject your claim if there is any breach in the contract. If you are unhappy with the result of this process in any way, you can approach the Ombudsman by calling any of the numbers on your screen now. It's a smart move to write these numbers down and keep them in a safe place.